Thanks for clicking. London's real estate sales plunged in November, with the market showing very few signs of a 2026 rebound. This according to the most recent data released by the London and St. Thomas Association of Realtors. Yeah, between falling prices and massive amounts of inventory sitting on the market, there isn't a whole lot of evidence that 26 is going to fare that much better than 2025. Even Remax, the same Remax of a 9.2% increase in prices on the eve of a rate hike in 2021, the Remax of 2025 is going to pick up pace on the eve of a trade war, says that the London market is going to remain firmly in the hands of the home buyer in 2026.
South Carolina.
So what I want to do today is go over London's real estate data for the month of November, take a look at the 2026 market outlook, including a discussion of changes in affordability, very briefly say some nice things about realtors, and then go over the importance of keeping your thinking cap on heading into the new year. We do have a big few weeks coming up with the Bank of Canada set to make its final policy rate announcement of the year next Wednesday, holding a press conference thereafter, and then shortly after that we will be awarding the 2025 Award for Excellence in Canadian Journalism. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features. That was down again in November, coming in at $561,000 in October, falling about $1,500 to $559,500 in November. So the benchmark price is down about $1,500 since last month, down about $64,000 since this point in time last year, back when London Realtors told us to expect a steady, solid 2025, with the market being in good shape moving forward.
I see nothing.
Next, the average price, which fell even more. The average came in at $595,700 in October, dropping over $10K to $584,000 in November. So the average price down about $12,000 since last month, and again down about $45,000 since last year. Next, the median price, which fell even more substantially. The median price, that's where half as many homes sell over that price, half as many sell under. London's median in October was $566,500, falling over $30,000 to $536,000 in November. So the median price down about $30,000 since last month, down about $63,000 since last year. And then moving on to the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale, and that moved up substantially in November. October's MOI came in at 5, bumping up to 5.7 last month. That is the highest amount of relative inventory London has seen heading into December for the past 12 Novembers. And then finally, the sales to list price ratio, which measures by how much over or under asking the average home sells, and that metric remained unchanged, coming in at 97.2 and then staying at 97.2 in October. So we've got the benchmark price down $1,500. We've got the average price down almost $12,000. We've got the median price down $30,000. We have much more relative inventory sitting on the market, and homes are still selling for about 2.8% under asking price. And these numbers add up, as always, when we look at the sales data, with sales coming in at 323, the third worst for the past 12 Novembers. New listings coming in at 676, the second highest for the past 12 Novembers, leading to 1,838 active listings sitting on the market, the highest level for the past 12 Novembers. And obviously, with so many listings sitting on the market, so much built up inventory, prices aren't heading upward anytime soon.
Tomorrow.
For its part, LSTAR did express some surprise with the dismal sales data, noting that with the improved affordability with lower prices and lower interest rates, it had expected more activity. Which, yeah, the board's president is sort of correct. Affordability has gotten better, though it's the price drops that are doing most of the heavy lifting. Last November, the benchmark price was $63,000 higher than it is right now, and a decent 5-year fixed insured rate from RBC was 4.44. Fast forward, $63,000 in drops later, and a decent 5-year fixed from RBC is 4.29. Payment-wise, with minimum down payment requirements on a 25-year amortization, in November of last year, we're looking at $3,252 versus $2,865 this year. So yeah, about $400 less per month to buy that benchmark price home than we had last year. Definitely good news, but also not really a game changer. Fixed rates are a little bit better than they were a year ago, but the bond market, which dictates fixed mortgage rates, hasn't really moved all that much either, despite the central bank cutting by 150 basis points in the past 12 months. And just remember that heading into 2026, fixed rates are down, but they're not down as substantially as many would think. Variable rates, those floating rates, those adjustable rates, those are down because those are dictated by the Bank of Canada, but those rates are also not overly advisable to first-time homebuyers given their inherent risks.
We're willing to take that risk.
So what does all this mean for the market heading into 2026? Prices are down, rates are down, but not by as much as many would have hoped. And as we saw earlier, there's an awful lot of inventory sitting on the market, more so than we've seen for the past 12 years. Meaning if we do see a major rebound in sales, it's going to take a long time for it to all get gobbled up, especially at 4% interest rates. No matter what your realtor tells you, there's an awful lot of inventory available. If there is a major shift, if that inventory starts to get gobbled up, we'll know well in advance. It will be there clear as day in the data. And what this means, until the data says otherwise, the actual data, not the people are telling me or a lot of people are saying kind of data, but until that data says otherwise, home buyers are in the driver's seat. Meaning, finance conditions, home inspections, under ask offers, conditions on the sale of your home. If your realtor won't protect your financial interests, as always, get one that will. There are a handful of them available.
Improvement.
And yeah, there are some good ones out there. I met one this year that advised her client to use a finance condition and even advised against waiving it prematurely. I met another one that was new to the business and part-time, but probably one of the nicest one of the nicest people I've ever met in the industry. I hope they don't ruin her.
I don't want you infecting my staff.
I've met some good ones through this channel. They can speak at great length on the bond market. They're more frank about the problems in the industry than I am, have their GEDs, and then, of course, you have the rest of them.
Buy it now.
But the point is, if you are going to be in the market in 2026, just make sure you keep your thinking cap on, both when you're A, interviewing realtors, and I stress realtors, and B, when you're out in the market with them. According to Real Estate Magazine, in their ongoing mission, admirable though it may be, to educate realtors on the sales process, emotions matter when getting your client to value the property. And a home that feels right to the buyer may command a premium even if it's not the best deal on paper. Meaning, if your clients fall in love with the property, they're likely to pay a higher price. Coincidentally, or absolutely not, car sales trainers tell their salespeople something very similar. But it's important to keep that in mind when you're shopping for a home. The salespeople that are out there know very well this is an emotional decision and can pull on those heartstrings, trying to get you to forget some of the things you've learned on this channel, pushing you to forget these graphs of where the market lies. Forgetting that if, for whatever reason, you're not able to secure that one home, there'll be 5 more like it next month at a lower price. So yeah, going into 2026, there's so much inventory on the market. Don't expect prices to be going up anytime soon. Definitely not in the immediate term. Definitely not in the midst of a trade war. If you don't think your realtor is protecting your financial interests, get one of the ones that will. There are a few of them out there, and the sooner we can send the bad ones back to barista school, the better. No offense to baristas or schools. With that said, we will obviously continue to track the London market throughout 2026. Make sure you click like and subscribe if you want to get those updates. But for now, thanks so much for watching.